Today, crypto markets rally with XRP leading the way. Hackers steal $100 million using the Horizon Bridge. And the COO of Public.com discusses the blending of fintech and crypto. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Much of the crypto market is in the green today. By noon Eastern, Bitcoin sits just below $21,000, Ether traded around $1,200, and XRP jumped to 36 cents. Ether is up more than 11% in the past 7 days, while Bitcoin has gained about 2.5% in the same time frame. To talk more about this week's gains and whether crypto markets have found the bottom, I spoke to David Seymour of Wave Financial. My question is, do you think that we found a bottom here, or should investors expect more turbulence ahead?
Yeah, I mean, I don't think we've quite found the bottom. There's as most people in the space know, there was a lot of things that went wrong. Multiple, centralized companies failed, and obviously, before that, a huge depegging of a stablecoin. There's still a lot of contagion to go. So the companies that have failed and several, bailouts like BlockFi and Voyager. There's so many other companies that are also either systemically damaged or very badly damaged. That we're going to see just continue unwinding for a while. Like a lot of crypto market neutral hedge funds didn't do anything wrong themselves, but now 80% of their balance sheet is locked in Three Arrows, which is probably going through insolvency. So they're locked up for 3 or 4 years, and that makes things really, really difficult. So they're forced, even if they didn't go bankrupt themselves, they're forced to unwind everything, and they can do it a little more slowly. But we're still seeing a huge amount of unwinding across hundreds of other counterparties that were just affected by what happened to some of those huge players.
Now, we've seen a surge in DeFi use in recent days with names like Uniswap, Aave, and others outperforming Ethereum. Do you think that this is the start of a positive trend for the DeFi space?
It is. I mean, we are a big allocator. Wave Financial we're a pretty large asset manager in crypto. We manage, a few billion on behalf of, and all the kind of difficult strategies around crypto. So that includes every aspect of DeFi. So we do, on behalf of our clients and some of our fund products, we do stablecoin yield farming, liquidity provisioning, a lot of derivatives, on-chain, off-chain derivatives. So we're a finance company. And we've always believed more in DeFi in the recent periods than in centralized finance, just because it's software. It's not a black box. It is perfectly transparent of where the margining levels are, what assets are in those margining levels. You can see everything. And you also have perfect liquidity. If there's something wrong in DeFi, you can literally pull your assets off every 15 seconds. So but DeFi is definitely the future. So the DeFi had no problems. There were no issues. All the automated market makers that solve issues when there are technical challenges now and then. But as far as this scenario where there was a massive drawdown, everything worked perfectly.
I mean, you mentioned this idea of buying the dip, and that, of course, assumes the fact that you are predicting that we've bottomed out. What is your expectation for crypto's recovery? Are we at the start of a multi-year protracted crypto winter, or are we actually already starting to stage a slow comeback?
Yeah, I'm actually pretty bullish this time. So on a macro basis, there's no good news on the horizon, I don't think, for the next 18 months. And how that affects crypto is always surprises people. In the last couple of bull markets, we had crypto recessions. I think this time we actually will probably buck the trend the opposite way. I think the world would be in such a dire strait. The initial reaction will be what always happens in crypto, which is risk off. But I think after this, next 3-4 month window, assuming crypto prices hold, some stability, 15 to 25K Bitcoin, I think we'll actually see people finally shift into this asset and kind of that, everyone talks about the decoupling, that why is crypto prices perfectly coupled, or has been recently, with the tech stocks. And I think this is when we finally break it in the right direction. Okay, let's catch you up on the latest headlines. First, FTX is reportedly in talks to buy a stake in crypto lending platform BlockFi. The Wall Street Journal reported that the crypto exchange is looking to acquire the stake in BlockFi after lending the company $250 million. FTX CEO Sam Bankman-Fried and his businesses have lent hundreds of millions of dollars to firms struggling through this crypto meltdown. Next, hackers just made off with $100 million using a crypto startup's blockchain bridge. On Wednesday, Harmony notified customers of the attack on its Horizon Bridge and said that it had tracked the stolen funds to a single wallet.
The company also said that it was working with authorities to retrieve these stolen funds. Bridges allow users to transfer assets from one blockchain to another and have become a prime target for hackers. Finally, Solana is launching a web3-focused cell phone. The foundation has partnered with a group of engineers to create a cell phone called Saga, designed to use crypto, web3, NFTs. In fact, the phone will include an app store focused on decentralized apps. The phone is set to launch for a small number of countries in Q1 of 2023 and will be priced at $1,000. Okay, for our main story today, Crypto World's Tanea McKeel spoke to Stephen Sikes, COO of Public.com, about the state of the crypto investor, the importance of financial education, and the blending of fintech and crypto.
You at Public launched crypto trading in October, I believe. How has that been going?
Yeah, well, thanks for having me. And just for everyone's benefit and all the viewers out there, Public is an investing platform focused on helping retail investors be better investors and build their modern portfolio on Public, and helping, every decision we make and how we build the platform contributes to sort of that mission. So we build a lot of products, services, content, and a community that ultimately serve that goal of helping people be better investors. And I think that's also meant over time expanding the definition of sort of public markets and what retail investors have access to. So like you said, back in October, we launched access to buy, sell, hold sort of spot crypto markets on the platform, in addition to sort of our existing sort of US equities business. And we're looking forward to expanding that actually into other sort of what I'd call cultural assets going forward, which will include a little bit of crypto in sort of the NFT space. We've announced that through an acquisition we made earlier this year, and helping sort of bring a new asset class to sort of public markets investors.
As you sort of hit on, October was an interesting time to launch crypto. It was just about a month, not even maybe later, that Bitcoin hit its all-time high, and it's kind of been falling since then, and everyone knows how it's been going in 2022. But what kind of activity have you seen on the crypto platform since then?
Yeah, so I think we got to place the crypto activity we've seen on Public within sort of the context of Public overall. And I think first, most important thing to mention is that our investor base, the people that use Public, tend to be really focused on building a broad, diversified portfolio and are focused on the long term. And so what we've seen, this might be different from what you've heard from other retail platforms, but what we've seen on our platform is actually a pretty steady continued engagement and continued sort of trading volume, maybe slightly downticked from our sort of peaks at the peak of the market, but pretty steady. We haven't seen a major sort of fall off in engagement and trading activity. The thing we've seen change over really the last sort of, call it 6 or 8 weeks, and even probably going back to the beginning of the sort of down cycle, maybe 6 months ago, is we've seen actually increased buying relative to selling. So we've actually seen an increase in sort of net inflows, right? So if activity has fallen off a bit, we've actually seen a dramatic increase in the mix of buys versus sells. So what that tells us is our specifically, retail long-term investment focused members is that they're seeing this as an opportunity to enter the crypto space at attractive prices. The other trend that we've seen is definitely a shift towards sort of the larger cap crypto assets, right? We've gone through a few different phases since October. I think, around the time frame in October, we saw a growth in sort of what I'd call like the community-oriented crypto assets that are out there. So thinking about things like Dogecoin and Shiba Inu and some of those that we offer on the platform. Again, we offer 30 total, but we did see a lot of sort of heart for those, later in or during that bull market, and when some of those communities were really growing strongly. But as we've seen sort of the bear market return over the last few weeks, we've definitely seen, I don't want to call it necessarily a flight to quality, but we've seen a flight towards the larger cap assets in the crypto space. So significant flows into Bitcoin and Ethereum specifically.
Did crypto prove to be a good cross-selling opportunity for either stocks or crypto? I know your investors, they're very long-term focused. Did you happen to see any investors come in because you added crypto to the platform and kind of start there and then move over to stocks? I know that we've seen that on over at some of your competitors. Is that something that you saw as well?
Totally. I think when we look at the retail investor base, I think they view things pragmatically as a set of sort of investable assets that are available to them, right? They are probably less likely than the industry to sort of draw arbitrary or, draw boundaries between, the investable assets that they have access to, right? So I think as we see, as we launched crypto, we saw, again, some of our strongest growth months in terms of new investors coming to the platform. And we attributed that largely to completing the feature set and the product set that retail investors really want from their broker. And so absolutely, we saw that trend. Certainly saw a large number of people come in, buy crypto with their first dollars in and sort of as their first asset, and then diversify into stocks. We've seen the inverse be true significantly.
When I think of Public, I really think of it as the brand that's kind of committed to safety and education among its investors in this bearish period that we've had, both for stocks and crypto. I think it's interesting how you're talking about seeing more buys than sells. To what extent have you seen any kind of real panic, and how, if at all, do you deal with that?
Yeah, it's certainly a challenge, right? We are first and foremost a self-directed platform, right? And so I think we want to create the context for our members to be great investors and have the best outcomes that they can. And in a bear market, that's certainly a challenge. But every sort of decision that we've made in terms of, like I said earlier, like the product, the services, the way we construct the business, the community that we've built is serving that ends. And I think to be more specific, in the bear market, we do end up with cases where people have, are seeing losses in excess of what they've, seen previously. And for this generation of investors, again, our investor base tends to be a bit younger, while still sort of on the higher income end of the spectrum. They are younger and they have only lived through markets that have gone up. And so our experience with bear markets is more limited, right? Maybe we've got some members who sort of lived through the great financial crisis and were investors through that period. But many of them have really only had their investment experience sort of since then. And the experience of like COVID, March 2020 was the last sort of recession or bear market that we entered, was incredibly short-lived. And so when you look at sort of the lessons that the market has taught these investors, is that they should be resilient and continue to buy throughout. So it has been a little bit of a rude awakening. I think we've seen a slower correction. We've seen a sort of a longer sustained bear market here than what our investors have sort of experienced previously. But like I said, their reaction is to buy more and to sort of average down rather than to sort of depart or stop investing.
Okay, that's all for this week, but you can find that interview and more over at cnbc.com/cryptoworld. We will be back again on Monday, and we'll see you then.